All right, let's talk about what MicroStrategy and Mara are doing and why it is absolutely hosing a lot of the other Bitcoin mining companies. This is not a jab at those two companies for the strategy they're employing. This is more me explaining what's going on because it's important to understand what's going on if you want to be a retail investor in this industry. I can make this guarantee to you today. No legitimate investor in their right mind is choosing to sell their holdings in Bitcoin mining stocks when the price of Bitcoin has risen to $94,000. It makes zero fundamental sense because right now, the business fundamentals, the business dynamics of Bitcoin mining companies are healthier and better than they have been in a very, very long time. This tells us that all of the sell pressure is actually coming from short pressure. There's a lot of short selling taking place on the Bitcoin mining companies that don't have exposure to these convertible bond offerings. Now, to understand what's going on, we need to know what a bond is. You see, if you choose to buy a bond, let's say you buy a bond for $100 at a 5% interest rate, you're essentially guaranteed that at the end of that term, whenever that bond expires, you're essentially guaranteed your initial investment of the $100 back plus the 5% interest payment. So it's a relatively low risk investment. Now, you stack on top of that the convertible portion, and it adds another dynamic and another layer to this entire situation. It means that if the share price of the company you're investing in rises to a certain level, you have the ability to convert your debt investment into equity investment. So a convertible bond offering can be thought of like a call option. It's a call option on the stock that you're getting exposure to. Let's take MicroStrategy, for example. Just the other day, Michael Saylor announced they upsized their offering of 0% convertible bonds due in 2029 from $1.75 billion to $2.6 billion, including a $400 million green shoe option, and it was priced at a 55% conversion premium. If you just got lost, hang with me. I'm going to do my best to explain this. I just got done telling you that with bonds, you're typically paid an interest rate. However, with MicroStrategy, these bonds carry a 0% interest rate. So if you choose to buy these bonds, you're only guaranteed your initial investment back when these bonds expire in 2029. You're not getting any interest payment, which means that you're actually net going to lose money by holding these bonds to inflation. Inflation averages 2 to 3% every single year. So you'd be losing 2 to 3% of your purchasing power every year that you hold these bonds. So why would people buy it? Well, it's because it's a convertible note. And as a result of that, it's a called option on the stock. He says that it was priced at a 55% conversion premium. That essentially means that the strike price on this call option is 55% higher than what MicroStrategy stock is trading at today. So if MicroStrategy stock gains 55% from here until 2029, these holders of these convertible bonds can choose to convert their debt into equity and get direct exposure to the stock of the company. This gets really exciting for investors if we say by 2029, MicroStrategy doubles. It gains 100%. Well, all of a sudden, these bond holders, just like a call option, can get exposure to the equity at a significant discount to whatever the market price would be if MicroStrategy doubled from here until 2029. Because remember, they have the right to convert their debt holdings into equity at that discount, at a 55% conversion premium to what the price is today. It's right around $500 today. So why is there so much demand for this? Well, it's because of that call option that's technically tied to this, but it's also because there's a lot of bond-only funds out there, such as in pensions, that look to boost their returns. And they can technically get past the written laws by getting equity exposure through bond packages. And there is billions of dollars out there that are looking to do this, that are looking to boost their return. Now, what this means is, and especially because this convertible bond has a 0% interest rate on it, this means that you have significant long exposure, where you really, 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 really want and actually need MicroStrategy stock to go up significantly in order for you to make money on this bond. If MicroStrategy fails to gain this 55% by 2029, again, remember, you've technically lost money to inflation. So historically, remember, convertible bonds are not a new thing. They've existed for years and years and years. But historically, because if you hold these bonds, you are net long by quite a bit, you would hedge your position by actually short selling the stock. That way you can arbitrage some profit. You can be right in the middle where you're basically raking in those interest payments every single year. But remember, with MicroStrategy, there's a 0% interest payment on this. So even if you arbitrage in the middle of this bond, you're still losing to inflation. So as a bond holder, if you can't hedge and arbitrage profit on this specific stock, MicroStrategy, because this is an industry where there is an extremely volatile underlying asset, you can choose to short sell the other companies that exist in the industry. So another way to put this is there's no way to lose. If MicroStrategy gains the 55% or more, you make a lot of money on the long side. Now, if you choose to hedge this position by short selling other Bitcoin mining stocks that don't have similar instruments, if the price of Bitcoin falls and this industry feels a lot of pain, you're going to make profit on the short side and get your initial investment in MicroStrategy back. So this is a win-win scenario, but it only presents itself because there is an underlying volatile asset that every company in this space is exposed to. That dynamic doesn't exist in most other industries. And especially the volatility of Bitcoin doesn't exist in most other industries. I can actually give you an example of this arbitraging that's taken place. We just talked about how Mara announced a new round of convertible debt offerings, and they're copying the MicroStrategy playbook, but they talk about in the press release that they're going to repurchase existing 2026 convertible notes, which means that they think that the purchasers and the holders of the 2026 notes that have hedged their equity price risk will have to unwind all or part of their hedge positions by buying Mara's common stock, essentially meaning that Mara knows that there's been a lid put on their stock from this exact thing happening. So let's look at the 2026 convertible notes that Mara is buying back. And let me zoom in really quick so you can see this a little better. These 2026 notes were issued in November of 2021, and they mature on December 1st of 2026. The interest rate, very similar to MicroStrategy, was only 1%. But the holders of this convertible debt, just like the company itself told us, was able to arbitrage this. They were able to arbitrage their long exposure by shorting Mara's stock. Now, in turn, if you are arbitraging a convertible and you're hedging that long exposure by going short on the underlying equity, it also decreases the likelihood that you are going to be able to convert your debt into equity at a profit. That's why a lot of the holders in the newly issued MicroStrategy bonds and the newly issued Mara bonds are not short selling MicroStrategy and Mara. They're short selling the other players in the industry that have yet to undertake similar convertible bond offerings. That way, they're not hurting their chances of the conversion actually taking place profitably. Now, the problem that Mara ran into is that the initial conversion price was $76.17. If you look at Mara stock today, it's up big as a result of the most recent convertible bond announcement, but they're at $22.71. The likelihood that Mara would hit $76 by the end of 2026 is very low. So essentially, any of these holders that still hold these 2026 convertible bonds, they're going to lose money to inflation because that call option is going to expire worthless. So they're stuck with getting their initial investment back, plus, well, the 1% interest payment that they'll theoretically get, which offsets maybe half of the inflation. But net, they're losing purchasing power by holding these notes. So what are they doing? They doubled down on the short position. Because that way, I know my call option is worthless, but I can still profit. I can still profit by short selling the stock. That's why Mara has approached these bondholders and said, we're going to repurchase these notes from you. Now, on the same page, we can look at some newly issued convertibles, 2031 notes. These are not the ones that were just issued a couple days ago. These were issued in August of this year. But these pay 2% interest, and the conversion price is $18.89. Well, already the holders of these 2031 bonds can exercise their call options and get significant return because they can get Mara stock. Mara stock, I keep saying Mara. I think technically it's Mara. They can get Mara stock for $18.89, and the market price is $22.64. So they're already highly profitable on that call option that's attached to those convertible notes. Now, what do Mara and MicroStrategy do with the proceeds they raise? They turn around and they buy more Bitcoin, which has the potential to add an extremely large amount of value to the company's balance sheet over the coming years if the price of Bitcoin goes higher. Hence, it makes the call option on this convertible debt even more attractive to hold. All of this should tell you that big money is very bullish on Bitcoin for the next 5 to 6 years. Otherwise, you wouldn't have billions of dollars flowing into 0% convertible debt. They believe strongly that these companies will appreciate tremendously in value over the coming years and that they will profit tremendously as a result of that in the call option they have on the convertible debt. So if you're one of these Bitcoin mining companies that is on the unfortunate side of the pair trade, where these convertible debt holders of Mara and MicroStrategy are short selling your company, what can you do to fight back against that and really help your shareholders? I have a few ideas today. If you have any ideas, let me know in the comments section. First of all, you could join the party. You can issue your own convertible debt at 0% interest rates. And all of a sudden, you're probably not going to have your stock short sold because those holders are going to take their short off your company and double down their short on the other companies in the space that don't have the convertible debt. My next idea is the company actually selling puts of its own stock, which sounds ludicrous. But the reason I think this is a good idea is because it's taking advantage of that short selling pressure. And you know what happens if the stock price falls and you have sold puts on your own company, you can buy back your stock for a cheaper price, which means that the overall shares outstanding decreases, and it is natural buying pressure that is guaranteed to come into your stock. And that's an important note to make also, that all short sellers eventually have to be a buyer of your company. That's the way short selling works. You borrow shares, sell them into the markets, and then you buy them back for a profit. But selling puts in a way would put a floor on your stock price and hurt the arbitrage profit potential that these bondholders have if they short sell your company and they short sell your stock. So selling puts, I think, is a great idea. And worst case scenario, if your stock price doesn't fall and you can't buy back stock, you just get to rake in those premiums by selling those puts. That's extra cash you can add to your balance sheet. My third idea is that these companies actually need to reverse split their stock. The way it is today, all of these companies in the Bitcoin mining space have hundreds of millions of shares outstanding. There is immense liquidity. But if you get rid of that liquidity, it gets really, really difficult to short sell a stock. So I don't think reverse splitting a stock is the worst idea if you want to take some of this short selling pressure off of your company. Now, the fourth option is a little bit more natural. You have to find a way to create immense buying pressure in your company. And that could be, again, those three options I just laid out, or it could be a huge, huge announcement where you increase the value of the company tremendously because investors say there's no way I cannot own this company if Bitcoin does well. That could be developing a ton of infrastructure. That could be making a game-changing announcement, how you're going to own your own energy assets and you're not going to be reliant on grid power anymore. That could be many, many things. Now, if you're a retail investor, what do we need to do? Well, we need to stay patient. We need to stay patient. You know, there's a lot of demand for this stuff right now. Eventually, the capital that's interested in owning this convertible debt is going to dry up. The buyers are going to have bought, and not much extra fresh capital is going to be available to come into these instruments. And if the price of Bitcoin does well, naturally, those arbitrageurs can shift the amount of stock that they're short selling to arbitrage. They can shade the long side, they can shade the short side. They don't have to be directly in the middle. So at a certain point, maybe it's when Bitcoin hits $100,000, there's a decent chance that those arbitrageurs will take off some of their short pressure and go actually extra long on Bitcoin. You need Bitcoin to make outsized moves and make those moves rapidly. Now, I have also discussed how Bitcoin mining stocks are risk assets. We need risk appetite to increase, which, yes, could happen as Bitcoin approaches $100,000. But ultimately, you just have to stay patient. Don't lose your mind. Things are going to work out okay. Short term, there's a lot of shenanigans going on, but everything ends up working out. If you have any questions about this, I know it's super complicated. There's probably portions that I meant to mention and I forgot to mention. If you have any questions about this, let me know down in the comment section. I'll try and answer you. If you have any thoughts to add, also let me know in the comment section. But with that, have a great rest of your day. Stay blessed. Keep 10 toes to the ground, your chin up. Peace out.